Whether you're planning to buy or sell a home in Hampton Roads this year, March may have been your best opportunity or your biggest mistake. Prices are moving, interest rates are shifting, and inventory looks nothing like it did this time last year. In this video, I'm breaking down everything that you need to know about the Hampton Roads market from the month of March of 2025, and I'm going to help you figure out is the time right now to buy or sell, or if you should actually just wait. We're going to break all that down and more right after this. Whether you're looking to buy, sell, invest, or relocate to Hampton Roads, I love to be the go-to resource for you. I help viewers like you each and every week figure out their next move in Hampton Roads. You can expect for me to keep it simple, strategic, and successful. You can give me a call at 757-294-8163 or look to connect with me with using any one of the links down in the description as well too. Give me a call, let's discuss what you want, and I'll put the plan together to get you to a successful place that you want to be. Let's talk about everything that's going on in March of 2025 when it comes down to the market stats that we receive for our local market. We're going to be breaking down everything that you need to know from average price, what the inventory looks like, exactly what's trending in our market currently right now, and if it's the right fit for you as a buyer to go ahead and think about considering buying in this market right now. Or if you're a seller, should you actually be listing your home or prepping your home for getting it on the market for sale? Or simply, should you just wait because maybe the timing is just imperfect at this point in time? Let's jump into the stats. Let's show you what's going on from there. We'll take a look at interest rates and we'll have a bigger discussion beyond that as well too. So let's jump into it. So we're going to start with the market 2025 stats here. I really like to make sure I keep this thing structured and strategically let you know exactly what you're looking at here from a data set standpoint. Right now, I have everything unchecked from multifamily and land. And here's the reason why. I want to focus directly on what's going on in the Hampton Roads market from a new construction and resale perspective. If you want to get into multifamilies, I look at that more so in the investor standpoint. And if you want me to bring you content like that, you definitely leave it down there in the link below, because investing with multifamily and land has been kind of hot lately in this market as well too. And I want to keep this streamlined just for those who are thinking about buying and selling in this market, because realistically, that's what the conversations is usually surrounding about, buying and selling. So if you want that investment piece, definitely leave a comment down below and we'll bring you that content as well too. So let's focus on detached and attached communities in our market right now for the March 2025 stats. Now what you'll see is the median sales price comes in at $347,000 across Hampton Roads, which is almost a 4% down in comparison to where we were last year. Now month over month is about 1% down, but it's still up 2.4% year over year from where we sat at this point in time last year at $339,000 was the median sales price. Now, when you're looking at settled sales, you'll see from month over month, they have increased to 1925, which is about a 20.2% increase, but still down by 6.7% from what we was at last year at 2,064 sales in the month of March. Now, the median days on market has declined down to 17 days median time frame, which is still up 21% from what we were last year at 14 days. Now, when you get down to average list of price received, you're still seeing about almost 100% list price to sale price ratios, but it's still down a little bit, about 0.3% year over year, and only up by a small margin of 0.1% month over month for the month of February. When you're looking at the median sold price per square foot, you're looking at a 2% swing from February to March, which takes us to $206. But we're seeing about a 4% swing from this time last year, up from $198, about $8 per square foot. Now you're looking at new listings, it's up 33%, almost 34% month over month, putting us at 3,111 new listings in the month of March alone. Now that's up tremendously by 9.2% from this period of time last year of 2,850 homes for sale, new listings on the market. Now the active inventory is up by 5% at 4,578 homes actually listed in the market right now. And then you'll see that's up 22% from 3,747,000 homes on the market last year this time as well. And then you see the month of supply of inventory is down by 12.9%, 13% month over month, but still up 31% from this period of time last year as well, when we was only at 1.8 months worth of inventory at this point in time. Now, this market has seen a lot of fluidity come into it in the last month. We've seen cycles where it seems like money was actually in the market, and we've seen a lot of buyers actually putting in more mortgage applications, kind of getting accustomed to what they were seeing from the interest rate spike and taking advantage of it in a lot of ways. Because in a market like this that we've seen tremendously, like if you watch any of the last couple of videos that we have on market updates, there's been a lot of seller concessions in the market. And now if the home is priced right and there's demand for the market and there's multiple offers in these situations, obviously sellers are more in control of that. So I know people always want to know, is it a buyer's market or a seller's market? To me, this is neighborhood driven and is actually a neutral market in my opinion here. Now there is some outliers when you go city by city, which we'll do here shortly. So stay tuned in this video, we'll get there. But I really want you to know, if you're here just to get the big nuggets of the day, yeah, media sales price pretty much steady, inventory is up, and new market homes came to the market in droves in the month of March. So can you expect to see the same thing in the month of April? Let's talk about exactly where the interest rates are currently right now, and then I will answer that question for you. So let's head on over and look at Mortgage Daily News, give us what they take on exactly what's going on with the interest rate market. Now you'll see interest rates as of Friday at the close of April 4th. You'll see that 30-year fix was down to 6.6%, 15 years at 6.02, jumbos at 6.75, your 30-year FHA was at 6.03, and your 30-year VA sits around about 6.05 on the national level. Now, as it says, rate rally reverses, but focus on bigger picture. This week is ending with the average top tier 30-year fixed mortgage rate at its lowest level since early October of 2024. The only way to be disappointed about that would be to focus on the fact that rates were even lower this morning, okay? Now, it says the rates fell sharply due to the market's ongoing reaction to the Wednesday's tariff announcement, and especially due to the China's announcement of retaliatory tariffs overnight. Bonds, which dictate rates, were at their strongest level right at the start of the domestic trading, but progressively erased gains. Why? There are several ways to make a case for Friday's rate reversal. A reasonably strong job market, news that Vietnam would lower tariffs on the U.S., which acted as a proof of concept suggesting tariffs could end up being less erroneous than feared. Fed Chair Powell expressed renewed concern over the inflationary impact of tariffs, as opposed to offering any indication that the Fed will be eager to cut rates in response to economic turmoil. In addition to those actual nuts and bolts, one could also consider that rates quite simply covered a ton of ground relative to their recent tendencies, and it's not unheard of the traders to circle the wagons on a Friday afternoon. Again, the average rate is still as low as it's been since October. If there's anything to be less than enthusiastic about, it's the fact that the nature of this motivation means that volatility remains a distinct risk for better or for worse. Now, what I really think that should be considered as well when it comes to our market, how this is impacting our market. I think naturally hearing about the tariff market that's being introduced and retaliatory expenses that's going on with other tariffs being put back on the U.S., I think that naturally is going to affect the interest rates, just as is discussed by Mortgage News Daily. Now, what I really want to see, though, is how that transpires over the next 30 days. I think right now it would be too headstrong of a lot of individuals to think that this is going to be the routine normalcy of the market. So let's see how this plays out over the month of April, and then when we revisit for our April update, see where we're at with interest rates at that particular time, because that's really going to give you an idea of where we currently sit at in this market, and that's going to really be able to tell you, are you really looking at having what you should consider is a reasonable price for a payment on a home, Or could you expect for that payment to go higher because the cost of goods goes higher? Or could it also be where you can see that the interest rate market actually starts to ease a bit because they see that tariffs are making it harder for people to borrow money at the level that they are borrowing the money at, and it may needs to be some easing of that. That possibly could be something to consider as well too. So right now, I don't think this is a time to make a decision on which direction the interest rates are going to go. Like I've always said, and my stance is, I don't see 4% anytime soon. I don't even see 5.2% anytime soon. But I could be totally wrong about that as well, depending on how this market actually starts to handle what they're seeing from the economy right now when it comes to the point of tariffs. So let's see how that plays out, and let's revisit that in the month of April, okay? So now let's talk about, is this a competitive market for buyer demand right now, okay? Like I said before, if a homeowner is expecting multiple offers in the situation, I think that can happen still in this market where you could price a home tremendously well, or it could be positioned well because of the quality of the home, the location of the home, the school zone of the home, and how many applications are coming into the market. That's going to lead to some competition in certain markets. And with that being the case, yes, you can expect to still see multiple offers be somewhat of a common trend here at certain select price points. And then I think what you can actually see that buyer activity is still remaining headstrong. Like, let's head back over and let's look at the stats from Domus a bit here and kind of see exactly what I mean here. So we're going to actually just take a look over at, we're going to go down and break down some of these cities. So we're going to just take some of these off, and we're going to go directly over to let's start with Virginia Beach first. When you look at Virginia Beach, let's click it here. Let's see what we got. So when you click at Virginia Beach, you'll see that Virginia Beach is only down 1%. So it still stands steady at your 395,500 versus where it was at last year, up 6.8%. So buyers are still finding value at the price points that they're seeing there at 395. You'll see that transactions was up 16% month over month, but still down negatively compared to last year. Now the days on market has tremendously decreased month over month as well, coming from 12 from 15 to 12, but actually up still by one day extra more on the market as of last year. You're saying that buyers are really buying homes at the list price or greater by that 0.1%. You'll see that the median sold per square foot is still up as well, $233 per square foot. New listings in the market, 718 new listings in the market came to pass, which is up 45% and up 35% year over year. And then you'll see the active inventory has now increased to 850 homes, which is about a 7.7 active inventory. Is up almost 50% from last year, from 568 homes in the market. And you'll see that the monthly supply of inventory in Virginia Beach remains low at 1.9 months of supply, which is down 7.6% from last month. And you'll see that it's up 57.9% from the month of March. Now, this is really interesting. We'll go and look at Chesapeake here in a second, but looking at the Virginia Beach numbers, that really tells me that the market has strengthened a lot, and it remains to show that buyers still have high demand to be in the city of Virginia Beach. Now, what could be some of the reasons why that possibly could be a trend? Well, we already know that Virginia Beach is location. Everyone who thinks about Hampton Roads think about coastal living, and Virginia Beach offers you that. Also, it just the hustle and flow of being in Virginia Beach. If you like to be close to proximity to like all the amenities, Virginia Beach homes are going to more likely check a lot of those boxes off as well. But what remains to be seen too is that homeowners are actually still putting their homes on the market in that location. So that begs the question, where are the homeowners going, or are they just upgrading property? Are these, that's what it really gets into. If we're seeing, are we seeing downsizing or upsizing? What is really happening, or are we actually seeing individuals leaving? Now, remember, this is a military-centric focused town, which we'll talk about here in our next segment, is that basically, we're trending towards permanent change of station season, which means that military members are both now receiving orders to actually relocate out of the area and receiving orders to relocate to the area as well. So there's a lot of this passing and motion going on as well too. And that's going to be something to actually really pay attention to. So the VA loan demand, I'm pretty sure that's going to be higher. PCS season is in full swing now. And then, we still have first time buyer activity, because right now at the beginning, usually around the beginning of the year, we see Federal Home Loan Bank actually provide first time workforce grants programs to buyers as well too, and so that kind of incentivizes the market a little bit to actually get out in droves to use free grant money to help them land homes in the market as well too. Now let's talk about this I just want to look at Chesapeake real quick, and then we'll get into seller demand as well too, and then we'll get into some more things here as we talk about it. But I really want to show you exactly what's going on with Chesapeake, one of our other major markets in the area as well too. Maybe we'll take a glance at Norfolk before we actually move on to our next segment. But let's just look at Chesapeake as we bring it up. Let's check that out. You'll see Chesapeake is up 9.2% month over month to $400,000 median sales price. Actually, up about $20,000 from this time last year, up 5.3%. You'll see that settled sales sits at 238 transactions, which is down 22% from last year this time frame as well. That's which reflects about 70 transactions. You'll see median days on market is down 15.8% to 16 days, up 33% from last year as well. The average listed price received very similar to Virginia Beach, where you're seeing that they're basically receiving at least at a minimum the list price on most homes in Chesapeake for sale. The median sold per square foot is up 1.7%, up 4.2% year over year, by $9 per square foot. And then you're seeing that the new listings in the market is up 34% month over month, but down 2.2%. So about nine homes difference in a year time frame around this time last year. You'll see the active inventory has increased to 590 homes on the market on average, and that gives you about a 19% increase from last year this time, and a 4.2% increase month over month. You'll see that the monthly supply of inventory has come up to 2.5 months of inventory, which is 2.5% month over month, and a 54% increase month over month in Chesapeake. Now we're going to take a look over at Norfolk real quick. Just why we're here, because obviously this is the Moving in Norfolk channel, so we would definitely want to make sure we give you the Norfolk stats, right? So let's check off Chesapeake to make sure that we're giving you the full data. And remember, these are all attached and detached homes in the local market. Now, when it's talking about Norfolk, we'll see it's down 1.5% to $309,500 for the median sales price, but still up 2.7% year over year. So about $8,000 difference here or so. And then you'll see settled sales is up 18% month over month, down 8.8% year over year. You'll see median days on market, 16 days, up 6.7% year over year for one day extra. Getting close to getting that 100% listed price to sell received in this market in Norfolk as well. It's still up by 1.1% from 99.6 this time ago. So it remains flat year over year pretty much. You'll see that the median sold per square foot is up 6.3% month over month to $212, but up 11% from 2024 this time. So about $22. $22 extra per square foot. Seems like that value has continued to rise. New listings, 378 homes came to market in the month of March, which gives you about a 21% increase month over month. And it basically remains relatively flat year over year, about 4 homes difference this time last year. And you'll see active inventory is 573 homes actively on the market, 6.5% increase. You'll see that that's an 18% increase year over year from 485 homes. And then you'll see your month supply of inventory is down 10%, and it's up 30% year over year to 2.3 homes per month's supply of inventory. Now, I think that is amazing to kind of see that momentum is there. We're seeing that the market is really insulated a bit here compared to a lot of other major markets that you may watch videos from on market updates because of our military presence, because that housing allowance from our military members keeps them locked into their home, especially if it's underneath their housing allowance that they're actually receiving. That helps them stay locked into that market. But let's talk about this from a seller standpoint. We looked at basically year over year active listings that's in the market. Once again, let's just look at the Norfolk ones just for an example here. You'll see that Norfolk active listings right now is 573 homes on the market, which is up 18.1% year over year, but it's actually up again 6.5% as well. Now, the active inventory is at 485 homes. Now, to me, this signals to me that buyers are still not coming in droves. I know a lot of individuals like wondering, Craig, why is there not even more homes on the market? And why is this why sellers are still in control of the market a bit here? It's because it's that rate lock-in effect. Remember, during the pandemic, people were refinancing at 2% to 4%. Remember, the market is still sitting around 6.6% from what we see from the interest rates on average, unless you have one of these specialty loans, FHA or VA loans. Now, when it comes down to this, though, what that means is that sellers are really not moving unless it benefits them to downsize or upsize, or if they have to have a life-changing event, which means divorce, death, relocation. It's just things that have to happen for this to be a forced event in a lot of ways as well too. So to me, you are not really going to see sellers move unless they're positioned to actually capitalize on the effect of moving. Sellers would be hesitant, especially right now in this market with so much uncertainty that they're hearing from the news. That they could feel like there's uncertainty on what the next move should be for them. And this is why I think it's important to have that discussion with a local expert like myself to kind of gauge exactly where could you stand. Because honestly, if it doesn't benefit you to move, I'm going to tell you that. And any local expert that you want to have trust in and they want to make sure they're doing the right thing for you as a client, they will tell you the same if it doesn't make sense for you, that there should be other options and other alternatives that you may want to consider. And this interest rate effect is really going to keep that where it's at. And what I do like about this, though, it allows for inventory that's coming on the market to be more of a quality sense of inventory. See, my fear is that if interest rates come down drastically, that's going to lead to where people want to upgrade properties or downsize properties or get into better quality homes, but they're going to have to put more there. It's going to allow for them to actually put lesser quality homes on the market. You see what I'm saying? So it's not saying that homes are lesser value or less quality, but during that pandemic time frame, investment properties was coming on the market at a fell swoop, and people was buying them sight unseen for informational purposes only, inspections, as is homes. It was a lot more of that being prevalent in the market, and that left buyers holding the bag in a lot of ways to get these homes back up to where they was livable and enjoyable to be in. So I think that's what you got to kind of take into consideration right now, that the inventory that's being pushed is higher quality, seamless quality, and you're seeing buyers actually having more control, actually to have these inspections to figure out if this home is a good take for them and going from there as well. So I think that sellers who are thinking about putting their home on the market in the foreseeable future, you just need to figure out where you're going to be positioned at, how your home positions you, and are you actually maximizing your equity in your home to get you to where you need to be. Now, let's look at some of these other cities as well too, like Suffolk, and I want to get you an idea about exactly where we're at with that city, so that way you can see from there, because we've already talked to you more so about the other cities that you may want to take into consideration. But let's look over at Suffolk right now and get you an idea of what's going on over there. So, blue box here, that's our signal for that this could be a seller's market that we're entering here. You'll see that declined from January at 5.3 all the way now to about 1.7% less than we were month over month, from February to 4.1%, but still remains about 50% higher than we was last year at 2.7 months of inventory. So what is my advice to buyers who are thinking about purchasing a home in Hampton Roads? First, get pre-approved, have all that taken care of, out of the way, because it's going to make your home search easier. And when you actually start getting to higher price points like the 700,000s plus, homeowners are going to want to see proof of funds that the home buyer that's going to be walking through their home is actually pre-approved already at a minimum. So you want to make sure you have that documentation out of the way, because it's going to make it easier for you to purchase ahead of competition if you're already pre-approved. Secondly, I also think that you got to think about what price points you're going to be ready to move quick in. The lower the price point, the more demand. The higher the price point is going to be very specific about who's actually looking and shopping in those price points. So you got to know what your price point is. You got to know how quickly you're going to be looking to make an expeditious move on writing the offer, getting the house under contract, and trying to get it off the market. That's going to be something that you're going to learn over the time of just doing the tours and shopping for a home, but also working with a local expert who can help you make that seamless transaction from whether you're going from a relocation standpoint or you're looking to make an investment or you're just looking to buy or sell. It just depends on what you're having to do. If you have to sell your home and then you want to buy a home, we can figure those things out. We have programs that assist you to make those very seamless and non-contingent on the sale of your home as well too. So reach out to me for anything dealing with that. So what's my advice to sellers? If you're thinking about listing your home late April or you're thinking about early May, and you want to get ahead of the spring wave, you want to get your house on the market now. You want to get to prepping it right now, so that way in about 7 to 10 days, we turn around, getting your home on the market and making it such an experience for the buyers that they're going to want to scoop your market and get it out the inventory immediately. I think clean, staged, and well-priced homes are going to go quickly each and every time. And remember, when you get into a higher price point like the 600s and 700,000s, don't worry and fret that your house did not sell within the first week. It typically can too. I'm not saying that it won't, but sometimes these probably higher price points, they require just a little bit more time to find the right buyer, because like I said before, mortgage applications are still going in, but everyone's not qualifying for the same amount of home that they qualified for before. So if you're unsure of the equity that you have in your home or the timing that you need to actually get this house on the market, call me. Let's get you a seller consult and discuss exactly what we can do for you to make sure that you have a seamless transaction from beginning to close. Okay. So look, I really want to thank you for being here for our market update. That's all the information that we have to cover in this video. Comment down below. Is there anything else that we could have covered for you that you may want to know about the market update in future iterations of it? Also, let me know what you think about what is going to happen with the market when it comes down to interest rates. Like I said, I'm a local realtor in this community. I would love to be your go-to resource. Feel free to give me a call at 757-294-8163. Just give me a call. Let's talk about what it is that you want, and we will outline a strategic plan that works best for you. It's been your boy Craig. If you found value in this content, definitely check out this video right here. I think it's a banger as well too. Peace.